Let's, welcome our first guest on the show. Fook Hien, Yap, Senior Investment Strategist at Standard Chartered Bank, is with us. Fook, great to have you in. So, we're looking at all of these moving parts and how it's shaping up post the Fed meeting. I was going through some of your notes, and you said that incrementally you were getting a little cautious on U.S. equities. And, you're willing to perhaps allocate more to Asia ex-Japan equities. Just run us through the thought process there. And what is it that's making you cautious on the U.S. market now?
Yeah, no, thanks very much for having me here. And yeah, you're right. I mean, we do have an overweight view on Asia ex-Japan. I think since the middle of the year, we've been talking about positioning for a weak dollar outlook. And in a weak dollar environment, we see that investor flows, they tend to look for better returns in a non-US dollar assets because of the weak dollar environment. And so as they look towards non-US dollar assets, we expect the region to benefit would be Asia ex-Japan. So that is actually one big tailwind. The weak dollar, we believe, will be beneficial for Asia ex-Japan. But look, we're not negative on US equities. We still expect US equities to go up. It's just that we believe there's a bit more tailwind with Asia ex-Japan. Valuations are significantly better there. And you see also policy stimulus as well coming through in China, and the AI and technology developments also very much similar to what's happening in the US, but you get it all at a much cheaper valuation. So the US, of course, the story is still very much driven by your earnings growth in the AI investments. We saw that in recent weeks, actually, the backlog is painting a much firmer picture of the future. So there's a bit more certainty in terms of what we're getting in terms of the growth in the next few years. So earnings growth really is driving the US. But also we were quite cautious with September being a seasonally weak month. And then technically some indicators are showing to us, just technically, the positioning could be a bit overbought. And so it could be some kind of consolidation or reversal in the US markets.
Hi, Fook. Good to see you, Ben. Fook, you're talking about the dollar weakness and being a little bit positive on emerging markets. Where does India fit in? I was looking at a couple of data points. India's valuation premium, in comparison to developed markets, has come back down to the averages, around 10% ballpark. And our valuations as a premium in comparison to the MSCI emerging market, that as well has come down drastically, and now it's in line with averages. Do you think that from year on, India, after that last year's consolidation, close to 12 months of consolidation is what we have seen while the global markets have been parting, it's time for us to catch up?
Yeah, I mean, you're right. I think we see in the past year that India has given up a lot of its outperformance versus Asia ex-Japan in the past year. And look, I mean, India remains a core holding to us. I mean, within Asia ex-Japan, the region we prefer at the moment is still China, because you're right, the valuation differential has come off, but because China is still at a low valuation, that's where our preference is. The way we're looking at India, I think with the policies at the moment, we saw the recent simplification of the GST ahead of the festive season, which we believe that will be supportive of domestic demand and supportive of consumption. But we're not seeing it in terms of the earnings revision yet. The earnings revision breadth that we look at is still negative. It's very high in terms of the mid-teens earnings growth, but revisions are still being negative. So I think you want to see that turning before we see a bit more interest developing and coming into India. But I think the setup is positive for the medium term. Like I say, valuations have come off. There's policy support coming through. And then positioning, especially foreign investors' positioning, we think is low as well. And again, that could be a positive. When earnings revision picks up and foreign investments come in, we think that will be supportive. But for now, India still remains as a core holding to us within Asia ex-Japan.
Fook, any thoughts on gold?
We like gold. We like gold. I think that we're going to publish our outlook, in fact, at the end of this week with a new target price for gold. But we do expect gold can go beyond 4,000. I think that's what we've written previously. Look, there's a lot of concerns now with the geopolitics and how that's going to impact the world. I think the headlines come and go. But more than that, I think it's the flows that we're seeing in terms of the central bank flows and then the ETF inflows as well. That is coming into gold. And an environment where real rates are coming down, we think that'll be supportive for gold. So yeah, we are positive gold, something that we definitely keep telling our investors, have some gold in your portfolio to hedge against inflation, to hedge against geopolitical risk.
Okay, all right, Fook, we'll leave it on that note. Thank you very much for joining in. Good to get that perspective from you, and good to know that India remains a core holding for you. That's a view coming in from Fook Hien of Standard Chartered. We will quickly